Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. Well, we're right above that 9,800 level on the Dow for the third time in recent history, as the major stock indexes rise to one-year highs. Dow 10,000, here we come, or so it seems. Let's see what our panelists have to say about that. Editor-at-large Steve Reitmeister, Senior Market Analyst Charles Rotblatt, and that top market technician Kevin Matris. So this is kind of a critical week here,
right? Because
earnings reality check is here. Given all of that, Kevin, what do you think? Is Dow 10,000 here in sight? Or, I mean, we've been here, three times before. Is this just another false alarm?
Maybe third time is the charm. It really does seem as if Dow 10,000 will be seen. And actually, I think we have a really good shot at getting to Dow 10.8 or even Dow 11. The last time we were here was back in September of 2008. And everybody has to ask themselves, in September of 2008, that was right before the market collapsed. We saw the market go down 27%, and that within a month's time, and within a 6-month period, the market was down 40%. So, the last time we were at Dow 10.8, we saw the market collapse. So you have to say, are we in a better position now, market-wise and economy-wise, than where we were back then? And I think the answer is unequivocally yes. So I think not only will we get to Dow 10,000, I think we're going to get to 10.8 and even challenge 11.
All right, Charles, this is a critical week here for earnings reports. We have some heavy hitters who are going to be reporting this week. Is this going to be a situation where once those reports come in, if it's not what the market's looking for, we can just forget about this Dow 10,000 picture?
Well, definitely. We need the companies to report some good numbers. And if you look at some of the companies reporting, particularly Goldman Sachs, we continue to see earnings estimates being revised up on them. Google, there's some optimism that they're seeing a rebound on ad spending. You've got Intel. The small netbook computers have been selling off the shelves, so there's an expectation that we'll have really good, I should say really good, we should have good numbers out of those companies relative to expectations. And certainly I think people are going to look not only at earnings, they're going to look at guidance, they're going to look at revenues, and I think all of those have to show an improvement over the second quarter. And if we get that, we should get above Dow 10,000. But it's important to realize this is just the first wave of earnings. Next week we should see hundreds of reports. The week after that, the same. So this week it's not that many companies reporting. It's about 29 companies in the S&P 500, but very big, heavy hitters. A lot of your sector leaders, Goldman, Intel, Johnson & Johnson.
Right.
And so they'll carry a lot of weight simply because of how they relate to other peers in their industry.
See, and he alludes to a good point. Is the market putting too much emphasis on earnings here? They're putting all their eggs in one basket. So if we don't get what we expect on the earnings side, then we're just going to see this rally go away.
Well, too many eggs. There's plenty of eggs in the earnings baskets because that's where it should be. We are buying shares in companies, and when we're owners of companies, we should be interested in earnings. That's what we walk away with, and that's essentially what stock ownership is about your partial ownership and stake in wanting that future stream of earnings in the company. So I think there's no shortage of importance in that. Right, the next 2 weeks is going to be the most critical time because, you're going to get most of the bellwethers out of the way, and it's going to give you a sense of where the industries are.
But I don't remember a time in recent history, and I've been watching the markets for a while, where such an emphasis has been placed on earnings.
And that's because there's usually greater clarity on where earnings are at. I'm saying you're in your normal business cycle. Let's say you're in the second or third year of expansion. It's fairly clear what's going to happen in the next quarter. Well, here, when you fall off a cliff like we have, and we've had this stabilization, we need to understand where we are going, okay, and what is a realistic picture of the future earnings estimates. And so that's why we said that this one's so important, because here again, maybe I misstated things last week. When I was talking about people need to see some growth and top-line growth, it wasn't about year-over-year growth. Obviously, we don't have any of that, okay? But it was about the sequential growth and a statement that here again, we haven't just stabilized, that business is actually getting better. We see more buying activity, whether that be from retail or individual clients, customers, or whether that's from the consumer, or whether that's from an institutional base. Because the institutional side seems to be holding up better. It's the consumer side that's a little more in question. So if we can see some sequential growth, then we can start to make more realistic expectations for the future, and that tells us where the market should be evaluated. But going back to the main question, yeah, 10,000, we're going to hit that mark. The question is whether we're going to go flying past that or retreat. And earnings over the next 2 weeks is absolutely going to tell us the story.
So I'm getting that all of you think that we're going to close above 10,000 here sometime over the near term.
Close above.
Or close at 10,000.
Yeah, we're absolutely going to touch it. We'll probably close above it. The thing is, how much further can we go?
Right.
All depends on earnings.
So that begs the question then. How much further can we go? Once we hit it, then okay, it's like, all right, been there, done that, now what's next?
Well, I mean, there's two ways to look at it. If you look at technical resistance, we got very slight resistance at 10,002. We really have stronger resistance at 10,008. But where you run into question is if you start looking beyond that, okay, say we get above Dow 10,000, we have a good earnings season, what's next? And I think it's important for people to realize this rally has gone on for more than 7 months. And simply just from a calendar basis, at some point, this has to pull back. I think you're also looking at valuations. Relative to 2010 numbers, we're probably about 14, 15 times earnings on a Dow. Not really, not very high, but certainly I think when you look at 2010, questionable economic growth, questionable unemployment rates, at some point people have to ask themselves, when do we get a pullback? And one thing that's really marked this rally, besides light volume, is really the inability to short. The only short that's really worked over the past several months is the dollar. Everything else, maybe a short, very short trade you can get in, but that hasn't happened, and that's also unusual. I think what will happen, more so than necessarily a market pullback, I think we'll see a sector rotation where we'll actually see a separation in the market, and some of the things that are doing well right now will cease to do well and will actually pull back. And at that point, it's be very critical for investors to be fluid and be willing to jump out of one sector or one stock and into another, particularly if they start seeing a divergence in earnings estimates, with some companies seeing rising earnings estimates and some companies either seeing flat or falling earnings estimates.
Yeah, you make some good points. Kevin, what's your gut telling you about this, besides that it wants another zone bar? Once we hit Dow 10,000, is it on to 11 or is it back to 9?
Yeah, the key, of course, is going to be the earnings season. As Charles had alluded to, we have 380 companies reporting this week, and then there's over 3,600 companies reporting over the following 3 weeks.
Right.
I do think that the market will get above that 10,000 area, and I really do believe that we will see the 10.8 to 11. But everybody should remember that the markets usually will overshoot their target. When the market is trying to seek a new downside level, it normally goes much lower than people would have imagined. And the same thing for the upside. And I think this correction that everybody has been waiting for, people have been waiting for a 10 or a 15% correction from 9,000, then 9,500, then 10,000, maybe 10.8. I think there could be a relatively large correction in store, but I just believe it has to happen from a much higher level, because any kind of meaningful correction from these prices, just in my opinion, is unwarranted given the state of the recovery right now.
And I just want to clarify, a correction you think would still be healthy here?
I think a correction would be healthy, but I think any correction in this area still will probably be relatively shallow.
So this isn't going to be a straight up affair. We could still be looking at some bumpy trading here.
Over the next few weeks, I'm just going to go on a limb here, okay? Because there was a lack of bad earnings pre-announcements, I think that most of the numbers are going to be fairly good. And so over the next couple of weeks, I think there's going to be impetus, okay, to not only close above 10,000, but to keep running. And I think in all the folks who were begging and pleading for a pullback, okay, they'll realize there's no pullback here, and they're going to jump in. To fuel to 10,005 to 11,000 is not unrealistic, which would be a 6 to 11% move from where we are now, which is not crazy in a post-earnings season. And it's from that higher level for which a pullback may very well take place. So in other words, kind of a question we had pondered here before we got started, what's more likely, Dow 11,000 or Dow 9,000? Right. I think Dow 11,000 is more likely, but that is overshooting probably to the upside, more than what earnings can substantiate. And then when we pull back, we're pulling back to 10. 10 is like taking the Normandy beach, okay? And I think that once we take it and we push higher, when we fall back, we still have the beach, okay? And then we're going to hold that one. But I think that there's going to be a lot of the rest of the money, the people who've been holding out the longest, when they get in this rally, it can really run fast. And then it's kind of like, is there enough earning support for where we're at? Kind of take a look behind you. Okay, and now you have your pullback.
Is everybody in at this point as far as being in the market? There's still a lot of cash out there.
There's still a lot of cash. I mean, you can look at what's going on with the bond auctions. Last week, if you take the 30-year auction out, which was not that great, but the other ones, we've been seeing the bid-to-cover ratio really been off the charts, and that's how many bidders there are for each bond. So a lot of money going to bonds, and that suggests there's still quite a bit of fear among investors.
All right, well, you can bet that they are going to be keeping an eye on this activity with more than just casual interest, and they'll bring us all up to date on their thinking as the days and weeks progress. With everyone here at the round table, I'm Terry Ruffalo.